Silicon Valley remains on fire, as you can see by my heat map. The only area that's cool is right along the San Mateo, Santa Clara County border here. That would normally concern me. In this particular case, it does not. I believe what's happening is people are no longer willing to pay the huge premium for these convenient commute locations, and this area is not doing as well as the rest of the valley. I think it's as simple as that. Condo and townhouses aren't doing as well. Morgan Hill, less convenient commute, is doing much better. So I think it's all about shelter in place. Commutes are not nearly as bad as they were, and people aren't paying the premium. Moving on to DUI, the most important indicator, the blue line is the actual data for the given year, 2020. The gold line is the 5-year median, 2015 through 19, sort of the gold standard. And the red line is the percentage of this year's data, 2020, to that 5-year median. So what we're looking at right now is DUI, and DUI is a little bit below the 5-year standard, and that indicates that the market is hotter than normal. So if the market is hotter than normal, I don't know what to say. That means that we're having a faster market. It's not hugely faster, but the normal data is sitting up here at 100%, and we're right about 80%. That means the homes are selling in 20% less time. Now what we're doing is moving on, and basically what I'm doing is I'm looking at the major components, and I'm looking at those major components compared to what the 5-year normal is, which is right here on the red horizontal line. So the available data is the blue line, and you can see the available inventory is right at 100%. The number of new listings is all over the place recently. You can see it spiked way up here, then it came crashing and it was actually low, and now it's back up. What I think's going on is this high point was Labor Day. Labor Day was as late as it possibly could be, so it fell into the following week compared to where it normally falls. So you had the normal after Labor Day comparison to being in Labor Day, which brought it down. You also had the fires. So I think that's just fluctuation. I'm not worried about that. If you look on to the number of new offers, the number of new offers spiked up right a week behind the number of new listings. So listing agents put the house on the market, it gets exposed, and then boom, the offers come in. And then you look at the number of new closings. The number of new closings is the yellow line down here, and you can see it follows the same pattern as the gray line, which is the number of new offers, but it's delayed, and that's the length of escrow. So now you can see it's been up here and bouncing around. The other thing I will disclose is this week's data is an estimate, and it's estimated based on the data report of the MLS plus a fudge factor, making up for late reports. Next week, I will update this week's, and I do that for 3 times. So I'm actually going back now and replotting these last 4 data points as agents report their activity and are reporting it late. Believe it or not, right now, about 25% of the closings are being reported late, and that decreases each week. So I'm doing this to try to get accurate numbers. And the reason I have deleted the number of new expired listings. I made that white so you can't see it. You can see it across the data. It's just all over the place. Expired listings is a very small percentage of the marketplace, and it's a garbage number right now because of all the cancellations from COVID. They're reaching their expiration dates and showing a huge number of new expired listings. New cancellations are the green line, and you can see it bounces a lot, but it's basically right at 100%. Now you're looking at the closings because I'm doing overbid, so I need the sale price. So you have 2 different components. You have the frequency of overbidding down here on the blue line, and you can see we're getting close to 60%. That means 6 out of 10 sellers are getting more than their asking price at the time they accept the offer. And that's a pretty strong marketplace. You can see the impact of COVID. It came down to about 40%, and then it turned around and went up. The biggest thing with COVID was the lack of volume, not the fact that the sale price and percentage of overbidding and everything dropped quite a bit. The other one is the magnitude of overbidding. How much are the buyers willing to overbid? And right now, it's just about 102%. You can see that it was up at around 106% when COVID happened. It came down, and that doesn't surprise me. Even though I would say the market's hotter now than pre-COVID, the fact that the magnitude of overbidding is as much doesn't bother me. Every time there's an insult to the real estate marketplace, the buyers are more conservative with their money. And that's what we're seeing right here is that buyers are being more conservative, and they're paying 101% over instead of 103% over. They just notched everything down a little bit. That notches down the average. Now we're looking at the weekly distribution of that sale price to list price ratio. So each line is a different week. You can see we have the red line September 19, we go all the way back to May 8th. The outer lines, these dotted lines, this line up here is the best month we ever had, because historically I didn't look at the data weekly. Also, the historical data is single family homes in Santa Clara County only, where this week data in the middle here is San Mateo County, Santa Clara County, single family homes, condos, and townhouses, because I'm wanting to see what's happening in every single week. But I don't think there's that much difference on this particular metric, and it gives you some sort of a benchmark. So this is the best month we ever had, which was April of 2018. This is the best September we ever had, and you have to compare the time of the year because real estate is very cyclic, and that was September of 2017. The lowest down blue line is the worst month we ever had, which was December of 2001. The next blue line up is the worst September we ever had, September of 2001. And you can see recently we're up near the top of the group. You can also see the dotted lines are some of the worst weeks, and those are some of the oldest weeks. So basically what it says to me is the market was improving, and now in the last several weeks, the last 8 weeks, it's been bouncing around because frankly, it's almost getting hard to see this red line. I'm probably going to have to increase the width of it, but you can see it's here. You can see it's right down here. You can see it through here a little bit. And basically that's saying the data really isn't changing from week to week. That's pretty good news. You're also sort of in the middle of the pack. That's pretty good news. Here's the same data for just the last 12 weeks without the outlying data. And you basically can see the red line a little bit better. But again, you can see it's all grouped with the last weeks. It's better than 8 weeks ago or 12 weeks ago, but it's, right in the middle of the pack. There's no huge difference. Now what we're looking at is my largest micro market. So now we've changed from the whole Silicon Valley, all three types of properties, to Santa Clara County, single family homes only. And this is just to show you what's happening in a typical micro market. And it's not happening in every micro market. Also, you'll notice the data now goes flat at the end of my graphs. That's because I'm going out to October 4th. That helps me produce these more rapidly. It also gets it away from the margin a little bit, so it's a little bit easier to read. Basically, what you show is the red line is the demand. So the demand is up here, the number of offers, the number of inventory available is down here on the blue line. Anytime the red line is above the blue line, you're in a red hot seller's marketplace. So you can see we were in a hot seller's marketplace after the Super Bowl before COVID. Once COVID hit, we quickly went into a buyer's marketplace. Once we could show properties on May the 1st, we rapidly came out of that, and now we're back into a seller's marketplace. Here we have the DUI in the blue line. The blue line went way up with COVID. It's come back down. Basically, if you're in this red rectangle with the blue line only, that means you have a seller's hot marketplace. I expect it in Santa Clara County to be between 40 and 80 days. This is a balanced marketplace. Believe it or not, we're rarely in a balanced marketplace. We're either in a seller's marketplace down here, or occasionally we end up here in a buyer's marketplace. We're down here, we would sell everything out in about 28 days. That's pretty rapid. The other two lines, this one down here, to me, the purple line is the more meaningful line. That's the median days on market. The gold line is the average days on market. So half the homes are selling in 9 days or faster. So basically 1 week on the market. Average time is a little bit longer because once you get past that 9 days, those are the overpriced turkeys that take longer to sell, and they bring up the average. Next, we look at price. Instead of just following the median price, I look at the 10 percentile price, the lower end of the marketplace, the median 50 percentile price like everybody else does, as well as the 90 percentile. And again, the lines become horizontal because I'm going into the future and I'm just repeating today's data. Today's data is from last Saturday. Well, it ends last night at midnight. In this particular case, since I'm micro market, it goes back 5 weeks instead of just 1 week. And then the last slide on the micro market is the overbidding. Again, you have two types of overbidding. You have the frequency of overbidding, and you can see in Santa Clara County, we're up around 62%, 6 out of 10, 3 out of 5 sellers getting more than their asking price. And you can see the overbidding here. I made the overbid line up here green, so you can see it with the red horizontal. You're above 101. I think you're right about 102%. This is a slide that I'll probably delete next week, but in a nutshell, it shows that we lost about $4 billion of real estate transactions because shelter in place. We are regaining some of this. I don't think we'll come anywhere close to regaining the $4 billion we lost. With that, I made it through the executive summary. I'm going to open it up for questions. I will go into a more interactive and continue on with the weekly stuff in more detail. But just to recap, my base URL is this tiny URL, RE graphs. You add in 2020-09-19 to get to the archive of this particular session on YouTube. It takes me until about 3, 4 o'clock to get that posted. The handouts went up about 8:42 this morning. You add the word handout and today's date, and to get to future meetings for the balance of 2020, you put in 2020 and you get to this presentation. If anyone's got any questions for what I've already covered, great, ask now. Otherwise, I'll do a additional recap.
Okay, on page 8, I think that's the page that you're talking about the price change, right?
No,
the 9. Page
9 is
yeah.
price.
So it looks like is this the real price was dropping or no?
No, basically COVID-19 happened right about here.
Yeah.
So we were about 1.38, I think. We dropped down to about 1.350 right here. So prices dropped. They hit a low point right around the beginning of June. But if you think about that, those transactions, because I'm going back 35 days plus a 30-day transaction, that's going back 65 days. Those were the transactions that were negotiated right at the end of April, which was the bottom of the price decline. So there was a price decline of about $50,000 on a 1.4 median price. But right now we're back up and we're higher. We're about 1.430. So we're about 50,000 higher than the previous peak pre-shelter in place.
Okay. So that's good.
You know, and the lower end has been steady and going up. The upper end's been a little bit more fluctuation. They had this big little bloop right here, right as shelter in place was happening. But anecdotally, I was hearing about a few transactions more transactions on the high end bringing this up versus any real appreciation. Here you have to wonder if this isn't some appreciation that's happened. But you know, when you're talking about the top end and only 10% of the property, you get a lot more fluctuation.
Okay, all right, thank you.
You're welcome. So seeing no one else, we'll move on to just a little lower pace, and feel free to interrupt as I go in this section of the presentation if you have a question. What we're back to now is looking at the 1 week data, which is Santa Clara County, San Mateo County, single family, condo, and townhouse data all together. The concept here is, what is the market doing from 1 week to the next? And as I said earlier today, the blue line is the actual data. The gold line is the gold standard, which is defined to be the 5-year median. This is the total number of active listings. And my definition of active listings is on the MLS, no pending offer. I do not include the listings where the listing agent is looking for a backup offer. So those properties, in my opinion, really are not available. So you can see, even through shelter in place being announced, the inventory basically traced exactly where you'd expect it to be. You know, you got to right at 100% here. Now you may be a little bit above, but I mean, you can't get more matching than that. The fluctuation here was mostly July 4th. Inventory normally comes down for a holiday. That's July 4th. That's Labor Day. With shelter in place, people weren't traveling. The holidays didn't impact the real estate as much. And so the market continued without changing. And that's what caused these increases on a percentage basis. Moving on to the number of new listings in a given week. Now, this run up here is probably my first cautionary warning in a long time. See how dramatically up the blue line came? But when I thought about it, I actually explained it away in myself. I think we were up here and above 100%, which normally would be bad because you have more inventory coming in, but we'll talk about supply in a second. But then it dropped down, and it dropped down because you had Labor Day, and then you had all the fires. And the fires were a distraction. There was smoke. It didn't look so nice. People delayed to put their house on the market. I think what we're making up here is the delay. So this line really is continuing fairly flat along here with perturbations based on what's happening in the local marketplace. And that's exactly what you'd expect it to see. And that's why it does, it fluctuates. And the red line, again, is the percentage of normal. Now, if you go back to the gold standard, look how far down it normally comes for Labor Day. That's because sellers typically don't want to put their house on the market on a holiday weekend because the buyers are busy and not going to pay attention. This year, it really didn't drop down very much, and Labor Day was a little bit later. And I think this dip was, as I said, the fire. Moving on to the next, this is offers accepted. Now, what's good here, and part of the reason I'm also not worried about the increase of inventory, you can see up here, it went off the top of the chart for this 1 week, but I didn't want to lose the resolution. Well, basically what it says is pent-up demand is so great. If more sellers come on the market, the buyers immediately buy up that supply, and that's why inventory isn't growing, even though we're having essentially the highest number of listings coming on the market this week than we've ever had. And I expect the number of offers will go up next week. Now, if all of a sudden with the record number of new listings for the year, and it was a record, I don't think I said that earlier, if we don't get basically a corresponding close to record number of offers accepted for the year, then you'll start growing your inventory. But it hasn't happened yet. I don't think it's going to happen. We need at least one, if not 2 more weeks to tell. But that's the cautionary flag. I don't think it's a very big one. Number of closings, you can see the big drop down here for shelter in place. And now that we're back after shelter in place, again, you're just bouncing around 100%. You had big spike ups because you didn't have a big impact from the holidays, and just fluctuation. Even the 5-year median, look at how much the 5-year median moves. 1 year, you'd expect to move more than the 5-year median. Expired listings, here's where shelter in place was announced. You can see not immediately, but basically 8 weeks after shelter in place, you started having an increase in the number of expireds. And I guess I should stay on the blue line. Again, it's because here a lot of sellers just knee-jerk reaction took their house off the market. Then those people that were more sensitive are less likely to come back on the marketplace. So that contract, that listing agreement had an expiration date. When that expiration date happened, they now count them as new expired. So they counted them once as withdrawn, and now they're going to count them again as an expired listing. I would not do that if I had better access to data, which I don't have. These big spikes are the end of the month because a lot of agents, when they're putting an expiration date, just go out 3, 4, 5 months and go to the end of the month to give them the maximum time to market the property. That's what these spikes are all about. You can see even the gold standard spiked up. The gold standard doesn't spike as much as the current year because with the gold standard, the end of the month can move from 1 week to another week. Number of new cancellations, this is encouraging because the number of new cancels is right on the gold standard. You can see there was this huge diversion right with shelter in place. But even when you say huge diversion, you're talking 160 listings out of probably something that was about, probably at least 2,200. So, it's not even 10% of your sellers went away and 10% of your buyers went away. So the market remained in balance. And in fact, what happened is a little bit more the buyers went away. So the market went to a buyer's marketplace for a short period of time. But again, nothing here to alarm me. Now with withdrawals, because they move them to expireds, there is no historical data. So the only thing I can have is the actual data for this year. And you can see right now we're somewhere around 20, maybe 25, and that's basically 1% of the marketplace. So 1% of the marketplace, was overpriced turkeys that were testing the market. They didn't get their offer, they took it off the market, or potentially had a car accident, a health event, and decided that now is not the time. Now we're looking at my heat maps. This is different than when we started off with because this is based on overbidding. And I actually combined the overbidding between the the frequency and magnitude of overbidding. So it's 2 put together and a little bit of a hedge factor depending on which way we're going because the 2 don't always 100% agree to reflect what's going on. The surprising thing to me, and I actually need to check this, that overbidding in Morgan Hill and Gilroy is in a balanced marketplace. And I think that might be true. And it's because I'm using the same benchmark throughout the valley. But what I think is really going on there, because that market's absolutely on fire, their balanced marketplace is normally 75 to 150 days. It's one of the slower marketplaces in the valley. Right now, they're one of the hottest I think it's 22 days of unsold inventory. But what's interesting is the agents down there and the consumers down there just aren't used to overbidding. So when you come up to here and use the same standard down there, they don't reach the standard. But I also question the data. So I will look at that. But even if it is in a balanced marketplace, I can understand why it's in a balanced marketplace. But this is closings in the week ending on the 22nd. Then what we're going to do is step forward a week at a time. So here is the 28th, a week later. Now you can see it went into a red hot marketplace and it stayed there. And you can see a little bit of fluctuation, but it looks like the last 3 weeks. So there's the 18th. Yeah, the last 3 weeks were no change at all. So up here in Menlo Park, Atherton, you have a little bit of a cooling going on. They're in a slower marketplace and they've lost that incentive for the commute. So they're getting less overbidding. Palo Alto is getting a little bit less, but they're doing better than the expensive areas in San Mateo County. But the bulk of the Silicon Valley is absolutely on fire. Now we're moving on to days of unsold inventory. So this gets rid of the lag time between of closing escrows. So again, most of Santa Clara County is on a marketplace. Up here, this is more a perturbation where it went from a balanced marketplace into a seller's marketplace, but it's going to be short-lived. See, there it went, bye-bye. So basically, this area here is sort of balanced on days of unsold inventory, but now it's actually gone to a cold marketplace. So you can see when you have small market areas, because in an expensive area like Menlo Park and Atherton, there's just not that many listings, so it fluctuates more. And you can see now it's back to a balanced marketplace. And this is the current graph. So you can see the bulk of Santa Clara County is in a hot sellers marketplace, the exception being Los Altos and Palo Alto. The bulk of San Mateo County being in a red hot marketplace, the differences being up here in the North County and the expensive areas down here. And again, this could be very minor. In fact, it might be this data up here hit 40.4 days of unsold inventory. That 0.4 days is what made it to be a balanced marketplace. If it was easier, I would actually do shades of color instead of shifts, because when you hit that fluctuation, there's not much of a change and you go from one to another. So this is the different areas, and what I was going to do, which is what caught me, is I was coming down here to the Daly City, the North San Mateo area, and you can see it's basically looks like at 28.1 days of unsold inventory. So clearly a strong seller's marketplace, but it was 22.8 before shelter in place, which is why the trend is favoring the buyer. But still at 28 days, you're not going to be in a buyer's marketplace. So what you have here is four major groups: days of unsold inventory, overbidding frequency, overbidding magnitude, and price. And the first of the three columns is before shelter in place, current, and the color code for both of these is the marketplace condition at that time. So you go to Los Altos, Palo Alto, it was at 37 and a half days before shelter in place. It's now at 45. The threshold to change is at 40. That's why this is white, a neutral marketplace, versus this being at below 40 in a seller's marketplace. This trend is favors the buyer. Now, if you go up to Saratoga, Los Gatos, just above that, you go, well, wait a minute, if 40 is the dividing line, why are these red at 43 and 63.9? It's because that micro market is slower, and in that micro market, 75 to 150 is what I consider to be a balanced marketplace. So I'm using the balance, even though I don't dwell on it, I'm using the code, the color code based on that particular micro market, which is one advantage. But you can see here, based on days of unsold inventory, when you're looking at single family homes, we're actually doing, on the most part, better for the seller and more of a seller's marketplace than we were before shelter in place took place. And see, in the expensive areas in San Mateo County, you can see you were at 150 essentially, and now you're at 80. Both of those are in a balanced marketplace, but this 150 is right at the threshold of becoming a buyer's marketplace, which happens at 150. And you're just below, you're 0.3 of a day below. This drops into a seller's marketplace at 75. So you're getting close, but not there. But there's clearly a difference between 149 and 80 days of unsold inventory, which is why I got the flag for favoring the seller. So it takes a while to understand all this. You know, the kind of thing I would do is just look through the different things. San Mateo County condos are really hurting. Notice how it basically across the board favors the buyer. Even in Santa Clara County, condos and townhouses are doing okay, and single families are basically favoring the seller. When you come over to price, pretty much all the prices are up except for condos and townhouses, and they're basically the same or down slightly for the buyer areas, but most of them are up, so we haven't lost any value. Now we're going to go into yet a different group. We're going to do 5 slides. We're only going to talk about one of them, and we're going to be looking at 11 different groups of data. So here are all the different micro markets so you can see. Here's the one we're going to discuss. First off, notice I went out to October 4th. That just makes things easier for me. It also gets things away from the axis a little bit so you can see the data better. What you're doing is you're looking at the 3 largest micro markets. The 3 largest being Santa Clara County single family homes, San Mateo County single family homes, and San Mateo County condo townhouses. And you can again see the condo townhouses were doing the best because days of unsold inventory, you want it to be lower before shelter in place. Coming out of shelter in place, they're doing the worst. So there's no question that condo townhouses got hit harder than single family homes. Now, if you look at single family homes, you know, the red line to the red line is basically the same. The gray line to the gray line is basically the same. You also have seasonal cycles. So, you know, you can't compare apples and apples, but basically I would say they're unchanged. Stepping through these, now you do median days on market. So here you have the condos, and then here you can see they were basically in the middle going into shelter in place. Now, again, they're on the top. So this is the median number of days that it takes to sell the property. So you can see the hottest marketplace right now is Santa Clara County single family homes. Historically, and that was what it was before shelter in place, but historically, San Mateo County is faster than Santa Clara County. So we've been, even before shelter in place, we were having sort of a little bit of anomaly with Santa Clara County being hotter than San Mateo County, which is pretty unusual. But, you know, it's not dramatic. But right now, Santa Clara County is selling their homes, and it looks like in 9 days, 50% of the sellers put their house on the market and then accept and report to the MLS a contract accepted within a 9-day period of time. And frankly, that's basically as fast as the listing agent and the seller are willing to look at offers. So that's how fast the market is. Now we're going to look at available inventory. We're going to look at it with all the micro markets because the 3 biggest ones jump out. Now, I have not had time to check, but look at this jump here. That might be a bad data point, and that would be my first suspicion, because you don't expect to get a jump that big. I mean, that's a huge jump. That's a jump of almost 175 new condos and townhouses, and out of 600, you know, that's something like a 30% jump. So I would almost wager this last data point is a bad data point, and I just trying to provide the absolute most current data. I just don't have time to find an error when an error shows up like that. So it's there. I wouldn't trust it. I would basically say the data's down here. Now you look at the number of offers accepted. Basically, obviously the most in Santa Clara County. That is the way it normally is, because Santa Clara County is the largest community, and so you'd expect it there. And just rough numbers, you come down here, San Mateo County is about half of what Santa Clara County is. So you come up here, this is at 1,200. I'd expect somewhere around 600. You're a little bit shy of that. So again, that would tend to say San Mateo County is doing a little bit less than you'd expect them to. And again, I think it's people not being willing to pay for the premium as much, as San Mateo County is usually a more expensive county than Santa Clara. And some of those people are now moving into Santa Clara County since they don't think they're going to have to commute to work every single day of the week. And even if they do, the commute isn't as bad because of other people are not commuting. Now we look at the number of closings, exactly the same, just delayed. So I'm not going to spend a whole lot of time. You can see it's up here pretty flat. You can see all the different micro markets. You can see San Mateo County. You can see condos and townhouses. You can see Santa Clara condos. We're outperforming San Mateo County single family homes as far as the number back here before shelter in place, and now they're underperforming. So again, that says the volume hit on the condo townhouses is greater than the single family. That makes sense to me because people now are spending more time at home. Because they're spending more time at home, they want to have that extra privacy that a single family home gives them. Moving on to the frequency of overbidding. You know, how can you complain when more than 60% of your sellers are getting more than their asking price? And here it hasn't changed. Where condos and townhouses were the worst, they're still the worst, but they're getting a little bit better now relative. In other words, they're getting closer to the single family homes. But, you know, nothing dramatic. It's not like we're dropping down and people are underbidding and we're down around 10, 15%. And that is something to keep in mind. You know, you may think that this number should go down to 0 if we were in a true buyer's marketplace, but some people purposely price their list house below at market value. So even when we were in the worst recession of 2001 and 2007-8, the frequency of overbidding was somewhere around 15%. 1 in 7 sellers is putting their house below the market value for whatever reason, and they will get overbids no matter what the market is. Now you're looking at the magnitude of overbidding, and you can see before shelter in place, it was much higher up here in the vicinity of 105, 106%. You can see we're not even quite to 102%. It is interesting that despite me maintaining that San Mateo County isn't as aggressive a marketplace as Santa Clara, here they're actually outperforming. And it might just be that it's a little bit wealthier, money isn't as important. There are buyers that really want a house, really want it, and they're willing to pay just a little bit a higher overbid than Santa Clara County. Now, granted, it's not a huge amount, and it's back to what you'd expect here, but in a slower marketplace, you'd expect a faster marketplace to have the most overbidding. That is not where we're having, because Santa Clara County is clearly a faster marketplace, and yet the overbidding is the same or a little bit lower. Now we're looking at sold price, and again, just so we can see the data, we're looking at the three biggest components. You can see the condo townhouses are basically fairly flat. You can see single family homes in Santa Clara County are pretty flat. And you can even see that and say that for about San Mateo County, except in San Mateo County, there's more bounce because the prices are higher. And also the sample size is smaller, it's about half. You can also see there was a rapid increase here before shelter in place. And remember, these were closings, so these had already gone through the escrow process. So these were contracts that were negotiated quite a bit earlier. So what I think really happened, for whatever reason, San Mateo County here was experiencing a larger increase in prices than they should have been. And then when COVID, it came back and got realistic, but it's going back up there. So again, this doesn't necessarily make sense because the prices are going up greater potentially in San Mateo County, yet that's the slower marketplace. Now we're going on to the median price. This is what everybody follows. Here it's a little bit clearer, and it's more statistically significant because you're in the middle of the marketplace. And here you can see the trend is basically absolutely flat for condos and townhouses. I mean, if you look at the numbers, you're at 800,000 right here at shelter in place. You go a little bit above, you go a little bit below, a little bit above, a little bit above, and right now you're right back down. If you look at single family homes in Santa Clara County, you're basically at 1.4. And I thought the number was 1.375, 1.38. Then you had a little blip up. Then all of a sudden here, after shelter in place, you were at the low point. So this is the contracts that were negotiated during the month of April. And then you improved, and now over here you're clearly above, and I think the number now is about 1.430. So it's not hugely up, but it's definitely not down. And then if you go into San Mateo County, you can see they were doing the huge run up before. They came down with the worst of the marketplace. They're back up, and they're also now higher than here, because back here they didn't cross over the $1.8 million range, and here they did cross over. Now they're back down at it right now. But again, that fluctuates quite a bit. Moving on to 90 percentile data. 90 percentile data shows you what the top end of the market's doing, and it gets bouncier in San Mateo County because there is a lot of bounce in that top echelon of pricing. I mean, you're talking about a home at $4 million. You know, it doesn't take, and you're only talking about 10% of the marketplace. So there's a lot more spread between any two houses, which causes this number to go up and down. Santa Clara County, a lot more stable, but still you can see the bounce. Condo townhouses, very stable. And that just tells you what the top end of the market's doing. But again, the top end of the market, if you really look at it, in San Mateo County, I would actually say it's going up. In Santa Clara County, I would basically say, you know, it's probably gone up because you had this little bloop here, which is sort of the same pattern that we saw in San Mateo County, I think, in the high end, which is not what you expect to see in the data. And then you came down a little bit and you came back up, but this number here is higher than most of the numbers back here. So again, prices are going up, not down. The one exception, if you made the argument, if you look right here, you're pretty close, and this is condo townhouse, you're pretty close to the $1.5 million range for the top end of the marketplace. And right now, you look like you're maybe at 1.375, something like that. So you've come down at the top end of the condo market. And I think what that's saying is those people with shelter in place are saying, you know, I want a little bit more privacy. I'm going to buy a single family home after all. And so they're leaving the expensive end of the condo market and buying the low end, median end in the single family home. Speculation, but just my thoughts. Escrow duration, nothing really here to tell, but you can see that before shelter in place, we were moving a little bit faster. Now with shelter in place, we're basically stuck at 30 days of unsold, 30 days duration. You know, occasionally San Mateo County's got down here to 29, but that's just saying that it's taking a little bit longer to close a transaction, nothing to worry about. You know, I've always preferred a little bit longer escrow. You can plan better. You have time to correct and pick up and still close on time. Here's the actual data for today's date. You can go and see. So this is single family in the different micro markets within Santa Clara County. This is within San Mateo County, and this is condo townhouses in both counties. And this is Santa Clara County single family homes. This is for my month of August. My month of August starts on August the 1st and continues for 35 days. This lets you see where we stand for the past 20 years. The colored lines are the more significant data points. And again, we're at the end of this section with a recap, so I will open it up for any questions since I haven't had any during the presentation.